IMF okays $118.2 million for Mozambique in the wake of Cyclone Idai. South Africa brings forward Eskom bailout to avert default. Plus, Saudi Arabia and the United Arab Emirates grant $3 billion of support to Sudan. Hello and welcome to Business Incorporated. I'm Chimezi Obi Iwawo. Let's get the show started now with the markets, and of course some most major markets here in Africa are closed for the Easter holiday, except the markets in Egypt. At intraday, the EGX 30 was down 0.17%. Meanwhile, the NSE and JSE indices both closed positive on Thursday, up 0.39% and 0.53% each. Kenya ended Thursday's session positive. In the Middle East, the Abu Dhabi stock market rose for a fourth consecutive session at intraday, helped by heavyweight lender First Abu Dhabi Bank, while the Saudi market was pressured by losses for its petrochemical stocks, especially Saudi Cayenne. The Abu Dhabi index rose 0.75%, with First Abu Dhabi Bank gaining 0.7%. Qatar's blue chip index edged up 0.44%, with Gulf International Services increasing 3.5% after its unit Gulf Drilling International signed a 3-year contract with oil field developer North Oil. Dubai's main index added 0.01%, with Dubai Islamic Bank, the country's largest Sharia-compliant lender, rose 0.6% ahead of its board meeting on Tuesday to approve first quarter results. Saudi Arabia's main index slipped 0.23%, partly led by a 5.7% decline in Saudi Cayenne Petrochemical after it swung to a first quarter loss from a profit last year. And markets in Europe also remain closed today for the Easter holiday, but traded higher on the final day of a shortened trading week last week, as investors looked past week Eurozone data to fresh corporate earnings. The Pan-European Stocks 600 closed provisionally up almost 0.2%, with sectors and major bourses largely in positive territory. Equities initially turned negative after the release of weak manufacturing PMI numbers out of France and Germany. German manufacturing data came in below expectations, while France's data also showed a decline in output. PMI data for the Eurozone came also in below forecast, stoking concerns of a slowdown in the region. The euro fell to a one-week low against the dollar after the figures were released. But investors soon turned their attention to corporate earnings, with results from consumer goods giant Unilever and energy management firm Schneider Electric beating expectations. And stocks in Asia were mixed today, while markets in Australia and Hong Kong are closed for the Easter Monday holiday. In Japan, the Nikkei 225 closed fractionally higher at 22,217.90, as shares of index heavyweights fast retailing SoftBank Group and FANUC declined. The Topix index gained 0.1% to finish at 1,618.62. Over in South Korea, the Kospi closed largely flat at 2,216.65 as chipmaker SK Hynix saw its stock price drop 1.59%. Mainland Chinese shares were lower on the day, with the Shanghai Composite slipping 1.7% to 3,215 points, and the Shenzhen Composite also shed 1.513% to 1,751 points. And in the U.S., stock index futures were lower this morning ahead of what could be a quiet day of trading, but one of the busiest earnings week of the season. Around 1:30 a.m. Eastern Time, Dow futures fell 33 points, indicating a negative open of 25 points. Futures of the S&P and Nasdaq were also seen slightly lower. Corporate results remain the biggest focus for the U.S. this week. On Monday, Halliburton is due to report before the bell. Other companies reporting earnings include Kimberly-Clark and, after the bell, Whirlpool and Calumet. The week ahead will be one of the busiest of the earnings season so far, with Coca-Cola, Procter & Gamble, United Tech, Verizon, Twitter, Lockheed, Martin and eBay, just some of the companies reporting on Tuesday. On Wednesday, Facebook, Microsoft and Tesla Motors are just a few of the corporate earnings to expect. And on Thursday, Comcast, CNBC's parent company. Amazon, Ford, Starbucks, and Domino's Pizza are among those reporting. Chevron, ExxonMobil, and Colgate-Palmolive will be reporting earnings on Friday. Busy week there. And on the global commodities, looking at the oil market now, prices rallied by more than 2% in early trade today, as reports that Washington is set to announce all imports of Iranian oil must end or be subject to sanctions made the rounds. Brent crude futures rose to a November 2018 high of $73.77 per barrel, while U.S. West Texas Intermediate crude futures also rose to a November 2018 high of $65.39 per barrel, up 2.2% from their last close. It was reported that the United States is preparing to announce today that all buyers of Iranian oil will have to end their imports shortly or be subject to U.S. sanctions. The U.S. reimposed sanctions in November on exports of Iranian oil after President Donald Trump unilaterally pulled out of a 2015 nuclear accord between Iran and 6 world powers. And in the metals market, gold prices rebounded today from a near 4-month low hit in the previous session as investors resumed trading after the Easter holiday, with the bullion gaining further traction on higher crude rates. Spot gold was up 0.4% at $1,279.48 per ounce, while U.S. gold futures were 0.5% higher at $1,281.70 an ounce. Elsewhere, silver rose by nearly 1% to $15.07 per ounce. Platinum gained 0.5% to $905.40 earlier in the session, while palladium was steady at $1,422.19, having earlier climbed to its highest in over 2 weeks at $1,424.40.